The aim of IAS 8, which is on accounting policies, on change in accounting estimates and errors, basically is to ensure comparability of entities' financial statements to the previous periods and also to the financial statements of other entities. Basically, that is the aim and objective of IAS 8, which is on accounting policies, change in accounting estimates, and errors. And when we are talking about accounting policies, or generally IAS 8, it's actually establish and ensure this aim is achieved by ensuring criteria for selection of accounting policies are adhered to, and this will be one of the objective of this video. Also, we are going to look at accounting treatment and disclosure, especially as it concerns accounting policies, accounting estimates, and error. That is why we have accounting IAS 8, which is what we are talking about. Now, concerning this video, what should we expect concerning this video that we are looking at? We are going to actually deal in-depthly on accounting policies. We are going to be looking at recognition, we are going to be looking at measurement, we are going to be looking at presentation and classification. Also, we are going to be looking at application in retrospect, will be one of the things that we will be looking at. And I will try as much as possible to scribble some things on our dashboard as much as possible, so that at least we can have some bullet points to take home as regards IAS 8, which is on accounting policies and estimates. So, if you are ready, I am ready. From GJAMES Associate Gbenga, Olatunji is my name. If you are yet to subscribe, please subscribe. And our returning viewers, we say we love you. Thank you for encouraging us. Okay, accounting policies, which basically, when I started, I let us know that its aim is for comparability. Should I put something down? The aim is for comparability of the financial statement. Aim of IAS 8 is comparability of financial statements to the period that we have existed, and also comparability to other organizations within our industry. That is the aim. And when we are talking about accounting policies now, which we are going to major on, we are going to talk about the aspect of accounting policies that deals with recognition. Accounting recognition. When we are talking about accounting recognition, what are we talking about? When we are talking about accounting recognition, we are talking about determining those items that our organization will be writing off, and those items that our organization wants to be capitalizing. And we'll be talking about CAPEX. I want to believe we must have heard the word CAPEX, capital expenditure threshold. So CAPEX. So in our accounting policy, we must have CAPEX policy, which deals with accounting recognition, whether we want to be writing off some figures or we want to be retaining them and capitalizing them over some period of time. So it deals accounting policy. There must be accounting policy on accounting recognition. Then there must be accounting policy on measurement. These are the aspects of accounting policies. Accounting measurement. So we must put policy as to measurement or our business operations in form of costs, in form of reliable valuation, in form of cost valuation, also realizable value determination. How do we determine our realizable value? How do we determine cost? What should we include? And you know what? Accounting policy must be consistent in application. Once we've made up our mind and we have an accounting policy, we must ensure we continue in it. And we are still going to get to those aspects of change in accounting policies too. So let's not go too ahead of ourselves. Another aspect of accounting policies that we must ensure we deal with, whether exam asks for it or on the side of practicality, we must ensure we have presentation on our accounting policy. We must have an aspect of presentation. Realizable, okay, presentation. This is the third aspect of accounting policies that must exist in every organization. And when we are talking about presentation, we are talking about classification. How do we classify items? How do we classify items? Or how do we want to be classifying items? Classification, correct. Once we made up our mind how items, how assets, how liabilities, how items we are writing off or capitalizing will be, their threshold and the like, we must adhere strictly to them. Now that we know the three aspects of our accounting policies that must be in place, the question, another critical question is, how do we go about selecting our accounting policies? Don't forget, under these three classifications, there are a host of other things that must be in place in our accounting policies. These are just the jugular. So how do we select accounting policy? So let's move on to the next, which we are going to call accounting policy selection. Let me put something down, please, so that it can be useful for us when we want to revise. Selection of accounting policies. I'm just typing directly, so please, if there are some typo, please pardon on that, so that we will not waste much time on what we can do without. Okay, so selection of our accounting policy. How are we going to select our accounting policy so that it will fall within the recognition, measurement, and presentation? We must decide from the onset what is relevant and needful for our organization. So it is relevant, things that are relevant to decision making concerning our organization, and this will vary from business to business, from industry to industry. Many times organization just copy and paste. It shouldn't be. Selection of accounting policy, we should think through about our decision making and the need for our user, and you know, there are a host of spectrum of users, so we must consider it from onset. Having said that, we must ensure reliable financial statements. What aspects of measurement, what aspect or method of recognition, what presentation method can we use that will be reliable for our own financial statements? Let's take, for example, some industries are in the statutory mandatory industry in which they must quarterly have an audited account, or at least an account for the regulators and the like. We cannot compare the strictness rather, and how stringent their industry is as to financial presentation with other organizations that are in less regulated industry. Of course, every organization, every industry is regulated at least by CAMA, but there are some others that are like the financial institution that are well regulated and the like. So what what will make our financial statement to be reliable must be considered and fairly presented. Also, present faithfully the results and the financial position of our entity. What accounting method must we adopt that will faithfully represent the financial position of our entity? We must put it into consideration. Also, we must ask ourselves, what will reflect the economic substance of our transaction and other events, and not mere legal forms? We must consider it. Those items that will actually represent economic substance of our transaction and other events that will be taking place. Also, we must ensure that our financial accounting policies is neutral. What do we mean by neutrality? Is free from biases, and bias could come once we begin to change accounting policies. So know that once we set, it is cast. Cast is an engineering word. That is, we don't change it. It's like a concrete, a block that is formed and made. It's cast. So it must be neutral. Not that we'll be going back and forth, changing now and then. We are going to get to where we talk about change in accounting policies also. Prudency must be considered while we are making our accounting policy. Prudency concepts. And also, we must ensure our accounting policies and method we are going to adopt, which will be part of our accounting policies, are complete in all material respects. They align with regulation in our industry, and also recognition criteria, the concepts about our assets, the frameworks and the like are strictly adhered to. So basically, if we are to summarize, selection of accounting policies, we will say that it must involve, or it must be based on knowledge. It must be based on knowledge. You see, everything that we've said is it's not too technical for us on the accounting side, but it must be based on knowledge. Knowledge is required. Knowledge of our industry, knowledge of our workplace, knowledge of our organization is important for us to be able to achieve that. Okay, having said that, let us now go to the change in accounting policy. Change in accounting policy. Accounting policies. What are the things that we must consider in change in accounting policy? And let's establish one thing. Change in accounting policy, IAS 8 admonish us to go back in retrospect and consider the effects of the change we want to make in our accounting policies, how it affects the prior year's figures. So accounting policies change must consider in retrospect its effect to the figures we had earlier declared in the previous years, especially that of last year. It is important for us to equally know that as much as we are going to adjust and adapt in retrospect our change effect of our change in accounting policies, it's very important to know that change in accounting policies will not be allowed because of its effect on the prior year, except it's required by the IFRS or IFRSs as it relates to our industry and particularly that aspect of accounting. Also, if we are going to change and the change will be allowed, the consequence and the result and effect of that changes in the financial statement must provide more reliable, more relevant financial information to the end users. Of course, it can include us. If not, the change will be questioned. The change will be questioned and may not be allowed by the relevant authorities, especially maybe the tax people. So having said that, retrospective application of prior year accounting policy or effect of accounting policy. Let me put something down quickly. Now, the relevant authorities, how would they know that changing accounting policies has occurred? Actually, it is expected of us to inform and disclose that we are having change in accounting policies. But how can somebody suspect that change in accounting policies has occurred? And especially for us writing exams, they can put scenarios and they will not tell us that the question is bordering on changing accounting policies. They will just tell us to talk about our observation and the like. Number one, how to know when changes had actually occurred in accounting policies. Number one, the recognition. Now we are going back to how we started because the first 3 points are important in determination of whether change has occurred or not. When we observe that the recognition method has changed, what we used to capitalize now, we are beginning to write it off, and the level of amount we are writing off before, we are beginning to capitalize it. You know that change has occurred. Two, in the aspect of measurement, when the cost measurement, the method of cost measurement has changed, we are no longer recognizing costs based on how we've been recognizing it before. Note that change has occurred. Also, when our classification of items in the presentation of our financial statement has changed, when we are no longer classifying things according to previous pattern, note that a change has occurred. So these are the ways that the authorities and the users can easily find out that change has occurred. And in exam, if you apply this approach, you will never miss the target of the question. Now we want to proceed to the disclosure of accounting policies. What are the things that we should find in it? From GJAMES Associate Channel, if you are just joining us, my name is Gbenga Olatunji FCA, and we love that you subscribe to GJAMES Associate Channel. We love you click all as notification so that anytime we are uploading new videos, you will be the first to receive notification. And comments, you can write us on the email being displayed and we'll definitely respond to you. Don't forget to subscribe because of the algorithm of YouTube and to encourage us to continue to do this good work. We want to believe you enjoy value for your time. So let us move on to another aspect of accounting policies. So when we had made changes in our accounting policies, what and what are expected of us to disclose? So we are talking now about disclosure of accounting policy. Disclosure of accounting policy. So number one thing that is expected of us to ensure we notify is the title of the standard that we have changed. Let me put something down. Disclosure of accounting policies. What we are expected to disclose after we had changed our accounting policy. So we need to ensure we notify of the title of the standard that we've changed from and what we had moved to. It must be disclosed. What other aspects of our disclosure is expected? The nature of the change in accounting policy must let us know whether in recognition we've changed our recognition method and this is our new CAPEX, or those that we are capitalizing before, we are now writing them off. That simply ensures that the business is growing. But if for any reason those that we are writing off before, we are now capitalizing, is a symptom that the organization is declining. I hope we understand that. Another thing, because of our time, that we need to disclose is a description of any transactional provision. Let's say we made provision for that aspect of our policy due to its effects in our business operations. We need to disclose that, okay, a provision is made and the description on our account. Also, the reason the new accounting policies provide reliable and more relevant information. Don't forget, it's one of the criteria for changing. If not, change will not be tolerated. So we need to write by way of notes on our accounts on as part of the disclosure. Why are we making the change? And we must be able to pinpoint the reason. The new change will provide more reliable information to the end user and more relevant information. Also, for the current and previous periods, to the extent that is applicable, the amount of adjustments to each items in the financial statements. Don't forget that there is retrospective application of change in accounting policy. So we need to let us know the adjustments that we've made and how it affects the previous balances, especially our return, our earning for last year. Also, we need to ensure, to the extent that is practicable within our power and accounting prowess, the adjustment that relates to accounting periods before those presented in the financial statement. So we may need to go as far back as possible, and this will, after the disclosure now, we'll move on to the limitation of change in accounting policy, and we'll talk much about that. Also, if retrospective application is practically impracticable, if there's an English like that, an explanation of how the accounting policies can change and has been applied, we need to let the user of information know that, okay, as far as it's practicable, we've done our best, but this is how far we can go, and that is one of the limits of retrospective application of accounting policies. So let's now discuss it fully. The limitation of retrospective application of change or changes in accounting policy or policies. Okay, when we change accounting policies with the intent that is going to provide more reliable information and more presentation and the like, which is okay. But the question now is, with the retrospective application of it, there may be more information that must be disclosed. In fact, there will be more information that we need to disclose after changes had occurred. And you know what? Oftentimes, the information that will go alongside with the change may not be available, because as at the time we were preparing the old accounting, using the old accounting policies, we do not need to gather information around that area. So the information is not readily available now that we've made changes. So retrospectively applying the new change, the new policy, we may not have information, especially for the first year of application, to put out for users or to use to adjust for the prior year, for prior year adjustments. And this is a big limitation to retrospective application. Another limitation that we may talk about is end users opinion. How would the end users see us? Don't forget that different interest groups are end users. So our change or changes that we've made, what would be the perspective of other end users? Does it favor everyone? Most likely no, will be the answer. So, and this is another limitation to change in accounting policies and retrospective application, because some people may feel that no, they've been short rationed by this change, and for you could not provide retrospectively information and adjust and the like. So it may cause a bit of friction, but of course life goes on and end users move on, the organization move on. But as much as it lies within our ability, we try as much as possible to ensure that accounting change in accounting policies are actually well dealt with, and we think through everything. We cross our eye and dot our t's. Let us quickly recap what we had discussed in this video. Number one, we introduce ourselves to IAS 8, that deals with accounting policies, accounting estimates, and correction of errors, and we major on accounting policies. We will move on to accounting estimates and correction of errors later. We, under accounting policies, now that this video actually is made for, we discuss the aim of accounting policy, in which we said the aim of accounting policy is comparability, and there are three areas in which accounting policy must dwell and be established on: accounting recognition in form of CAPEX or writing off items, the measurement in form of how we measure our costs and put them in the books, like the costs and valuation of our items and the like. Also, accounting policy must take care of presentation in form of classification of income, expenses, assets, and the like. Also, we spoke about selection of accounting policies, and the bottom line about that is that knowledge is key, among so many other things that we must ensure before we can select accounting policy change. Also, we discuss I didn't dwell much on that because of our time, because they are numerous. So you may need to go back into this video and check that. Also, a quick recap on change in accounting, and we talk about the application of change in accounting policy must be done retrospectively. That is, we must go back to and adjust for the effects of the change we now make to prior year. Okay, we also talk about disclosure of accounting policies. Disclosure of accounting policies and the items we need to disclose and our intent, whether it will be allowed or not based on how IFRS is, and whether is our changes will bring about more disclosures and more reliable information to the spectrum of end users. Last but not the least, we talked and spoke about the limitation of retrospective application of change in accounting policies. From GJAMES Associates, Gbenga Olatunji FCA has been speaking. We are value to life. We are value to your businesses.